Welcome back to Fast Market, everyone. Kevin Hinks back here for the middle segment of our show. Alex Coffey has agreed to stick around and help us out. We appreciate that. Now I'd like to bring in the Vice President of Research at LikeFolio.com, Miss Megan Brantley, to the show. She's going to look at big box retailer. And Megan, this is really a discussion when we look at retail and big box retail of four major names, isn't it? It's Costco, Amazon, Target, and Walmart. And that's where LikeFolio.com focuses their data, correct?
Yeah, that's exactly right. And I think that it's interesting, just to kick this off, we'll start with looking at these big underlying trends that are kind of setting the stage for all of these names, especially into this holiday season. And the first main takeaway is that in the last 2 years, probably the biggest shifts in consumer shopping behavior has been the adoption of curbside pickup, of same-day delivery, or buy now, pick up, buy it online, pick it up in stores. So the speed has increased. So consumers want things now, right? They expect these levels of free shipping. And so all of these players have kind of adjusted. On a year-over-year basis, we're seeing some tempering in these e-commerce mentions, but in general, the major holding pattern has been we still see these elevated rates of demand for same-day delivery, for these omni-channel fulfillment mentions. And so all of these companies, Walmart, Costco, Target, Amazon, have these options and provide consumers with these options. And in an ironic way, you have Amazon now playing catch up to elevate, to keep pace with this service standards that these other companies are establishing, because they have this massive physical retail presence. And one thing we wanted to look at is, okay, heading into this holiday season, we expect to see some seasonal ramp here. How are all of these names performing against each other, and how are they? Is this an instance of where consumers were just shopping early and demand was pulled forward, or are they continuing to shop? And what we see is we're seeing Walmart and Costco do really well right now. The fact that we're seeing this double-digit increase, I think, is really strong. This indicates to us that consumers are still shopping, they're still spending, especially with these two retailers. But then you also see, Amazon and Target, these are still positive numbers. So consumers are still spending, but it's interesting to see Walmart and Costco kind of leading this pack here.
That really is interesting, Megan. And so kind of a two-part question for you. First off, do you have any insights as to why Costco's outperforming? When I first see that data, to me, it seems that you're electing to go to a Costco. You're paying for a membership. I would imagine they don't have as many cost pressures on their end, so they've been able to keep supply, or not necessarily supply, but prices lower. They don't have maybe the same kind of labor expenses, shipping costs that some of these other companies have, but they are wholesale for the most part. So I'd imagine that they do kind of have smaller margins in the end, so maybe that ultimately will catch up to them. But then the second part is are Walmart, Target, and Amazon, while their data seem to kind of have some disparity right now, is there a point now where they're somewhat interchangeable to the consumer? They all sort of have this different, multi-legged approach to how they can get goods to their consumer. Is there a loyalty right now in those? A Costco, I think you set to the side because you have the membership. There maybe is this loyalty factor. But are the others one mistake away from losing business to one of their competitors?
I love these questions. So I think for Costco, one of the major drivers that we're seeing is just that membership retention. Whenever we look at mentions of canceling, we're not seeing elevated mentions of canceling. We are seeing increases in the number of people who are talking about renewing their membership. So I think Costco did a really great job of taking advantage of people who tried their store maybe for the first time over the last year and a half and have enjoyed the experience. And I think that once you're paying for a membership, maybe you're more inclined to continue using that service because, you've already shelled out, you've already paid that cost of entry, right? And I think Costco also does a really good job of providing consumers with a positive experience when they are shopping in the store. We do see now that kind of shift the other way into now consumers are doing shopping in store. So whenever you have this discovery element like Costco has, that's definitely an added bonus from the consumer perspective. But for your other question, I think that it's not necessarily a mutual exclusive choice for consumers saying, okay, am I going to Walmart or Target or Amazon. I can see cases where maybe you would potentially, you'd shop at all three, potentially even on the same day. A lot of the mentions that we look at when we look at Walmart are grocery mentions. So we see a lot of people who are talking about maybe they're ordering online, their groceries and then swinging through and picking it up on their way home. Whenever we look at Target, we see a lot of apparel mentions. So that's kind of a different niche. And then whenever you look at Amazon, sometimes we see a lot of those Amazon basics or electronics or just kind of easy things that you can have, shipped directly to your house. So I think that there's definitely a space for all of these names to operate and fulfill consumer demand. But from at least our perspective, when we look at how are all of these names stacking up in relation to what is expected. So if we were to generate an earnings score, obviously it's not earnings season right now. These aren't about to report earnings, but if we were, the way that they would all be ranked, I think an interesting thing is they would all be positive, but we have Walmart with 35. We've got Costco next at a plus 26. We've got Target at a plus 12 and Amazon at a plus 7. So all in all, that tells me this is, the consumer health is pretty strong right now. Consumer demand is pretty strong right now, but Walmart and Costco are elevating themselves comparatively to where we would expect them to be right now.
Megan, I don't know anyone who hasn't gone into Costco the first time they go in. It's a life-changing experience, right? The first time you go into Costco, I compare it to like the first time you use electric windows in your car. You can't go back. You can't go to other retail experiences once you've experienced Costco, how strong of a place it is. But the question, I think the outlier here, the one that it has a different identity than the others is Walmart, right? Walmart's the one that seems to have the image problem or the identity crisis, right? People love Walmart. They don't like to go in there. They like the prices, and really the other three can't beat their prices day to day. But people still don't like to go in there, Megan. And I think their online has thrown a new chapter into retail. But how do you look at Walmart versus the others? Costco, like Alex mentioned, that's a membership. That's got its own loyalty, 91% in terms of customer loyalty, people re-upping on their memberships. Big, that's incredible number. But Walmart's different, isn't it? Walmart's just a walk-in, you don't pay a membership fee, it's really low prices, it's big volumes, but it's got an identity crisis that they haven't been able to shake yet, Megan.
Yeah, I think you're exactly right. And when you look at the consumer happiness levels, the overall consumer happiness levels, that's really reflected because Walmart is the lowest in this pack. However, whenever we look at this change over time, Walmart's sitting at 54% positive, but that's actually a 9% improvement versus where it sat last year. And a lot of that is because more and more consumers are using its app and they're having a much better experience. Just anecdotally, I was talking with friends and some of them were like, is Walmart have basically an Amazon online? And I was like, that's a really interesting way to put it because they do have an online marketplace that people are starting to discover and people are starting to really enjoy.
Sure.
So I think it's brilliant that the company is leveraging this. And I think that that's why you're starting to see some of that traction, at least in our data. But it certainly has the most ground to cover when it comes to happiness because there is an image problem there. There is a gap. Are you guys regular shoppers of Walmart or are you using the app at all?
Well, Megan, I can say that I don't do much of the shopping for my household, so I guess I don't have an opinion. But I do have a question for you, though, because it seems like the trends are holding up from the consumer front in terms of all of them are performing strongly. It's just a matter of how strong, and there's some, relative outperformance. So my question to you then is, when you think of a company like Amazon that has kind of ancillary businesses that really over the last 5 or so years have been kind of the strong pieces, things like AWS, which we've watched that part of the market, kind of the cloud side, be under pressure lately. When you're looking at these overarching trends of consumer strength, and if you consider that to be continuing into the future, does LikeFolio look for more of a pure play and kind of set the risks of Amazon and its other parts of its business off to the side? Or is Amazon still a key name in this space? And despite maybe some AWS concerns, it would still be a winner in your guys' mind?
I think that this is one of those things where we look toward major trends because a lot of those big trends are going to be drivers of cloud adoption or of anything like that. And as those trends are still increasing and as that, that tide is still rising, I think that that's still something really significant to consider whenever you think of Amazon, especially as it grows that side of its business. But obviously, from our perspective, our data leans much heavier on this consumer-facing side. So that's where we have probably the better insights just into the things like it's Amazon Prime and it's Amazon Video and things of that nature. So from our perspective, at least on the consumer side of things, Amazon is doing pretty much exactly how it probably should be doing, how people would expect it to be doing, maybe just slightly better. +7, that's not super bullish necessarily, but that's still a positive number. So for us, I think as long as those trends that are driving the cloud adoption continue in the direction that they're heading now, and as long as they continue to provide a positive experience for consumers, we see this as they're performing as expected.
Megan, I will give you my answer to whether or not I go to Walmart. The answer is yes, I do go to Walmart. But I started going there because my wife used to go there, and I decided that I had to go as her bodyguard. And then I kept going, but I do go at off hours. I never go at peak hours. I go really early on Saturday morning and get in and get out. And there is my Walmart story. I started out as an unpaid bodyguard, Megan. But Megan Brantley, thank you so much for coming on. As always, have a great day. Great data, as always, from LikeFolio.com on the big box retailers. We really appreciate it. All right, now,